Hello everyone, welcome back to our channel. Now we are discussing on financial crimes, understanding the types, laws, and global impact. Important subject that affects not only business and the governments, but also ordinary people. These financial crimes are affecting even ordinary people like you and me. In today's global economy, financial crimes are on the rise, and they pose serious threats to economic stability, corporate governance, and even national security. From money laundering to insider trading, from corporate fraud to cyber financial crimes, these activities are evolving rapidly with the technology. This video will cover what is financial crime, major types of financial crimes, and global and Indian legal frameworks to deal with the financial crimes and high profile cases, and what are the lessons we have learned, and the role of technology in detection and prevention, compliance requirements for business. And finally, how individuals and professionals can stay protected. This is what we are going to discuss. We'll see first what is financial crime. Financial crime refers to a non-violent crime that results in financial loss. Usually committed by individuals, companies, or organized groups that gain unlawful monetary benefits, unlawful financial gain. In simple word, financial crime is a crime against the property, crime against money, or trust. It involves fraud, dishonesty, manipulation of financial system, or misuse of information, insider information. Unlike the traditional crimes like threat or robbery, these financial crimes are often hidden behind paperwork, transactions, and digital systems. We'll see the characteristics. What are the key characteristics of financial crimes? These are non-violent but highly damaging. Involves breach of trust. Difficult to detect immediately, often international in nature. Requires legal, regulatory, and technological intervention. We'll see the types of financial crimes. The major types of financial crimes. Let's break down the most common types that are highly relevant today. Fraud, money laundering, insider trading, bribery, corruption, tax evasion, cyber crimes, terrorist financing, Ponzi schemes. We'll discuss one by one. What is fraud? This is an intentional deception to secure unlawful gain. I'll give you an example. Bank fraud, insurance fraud. These are all intentional deception. Accounting fraud, credit card fraud, Satyam case, Satyam scam where false accounting inflated profit by over 7,000 crores. This is money laundering. What is money laundering? The process of making illegally obtained money appear clean and legitimate. Because they place in it comes in three stages. First, they will place the money, then it will become layers like subsidiaries, and then integrate. So placement, layering, and integration. It looks like a clean and legitimate, but the process of making illegally obtained money. We'll give you the reference. Prevention of we have Act Prevention of Money Laundering Act 2002. This is Indian law, and FATF international guidelines. And another one we'll see the insider trading. Using unpublished price sensitive information to trade securities for unfair gain. This is called insider trading. They are insiders. They know unpublished price sensitive information. and they trade securities for unfair gain. Public will not know. Only related parties, those insiders, they knows the insider information of the shares, which will affect the price, and they will trade. SEBI prohibition of insider trading regulations 2015. And we have the case law, Harshad Mehta securities scam. This is insider trading only. And another one, bribery and corruption. Offering or accepting money or favors to influence decisions. Global impact, yes, it hampers ease of doing business, damages reputation. For this, we have Prevention of Corruption Act 1988. And another one, tax evasion and financial misreporting. This is deliberately avoiding taxes through illegal methods. The examples, case laws, Panama Papers and Paradise Papers exposing offshore tax havens. Another crime, cyber financial crimes, hacking, phishing, ransomware targeting financial institutions. Example, Cosmos Bank cyber heist. 94 crores stolen through malware. Another one, terrorist financing. Terrorist financing is funding of terrorist activities through illegal channel. Closely monitored under FEMA 1999 and global anti-terror financial norms. We have Ponzi and pyramid schemes, Visa Ponzi schemes. These are all fraudulent investment schemes promising high returns with little risk. We have a famous case, Bernie Madoff Ponzi scheme, USA, Sahara scam in India. What is legal and regulatory framework? PMLA, Prevention of Money Laundering Act 2002. We have Companies Act 2013. Fraud provisions under Section 447. We have Income Tax Act 1961, tax evasion penalties. We have FEMA 1999, cross-border financial flows. SEBI regulations, insider trading, fraud in securities market. Informational Technology Act 2000, cyber financial crimes. We'll also discuss global laws. Financial Action Task Force, that is FATF recommendations. OECD, Anti-Bribery Convention. USA, Sarbanes-Oxley Act 2002, UK Bribery Act 2010, European Union Anti-Money Laundering Directives, AMLDs. These are all global legal framework. We also will see high-profile case studies. Visa Satyam scam India. What is Satyam scam? There is accounting fraud that shoot corporate governance. Nirav Modi case, PNB scam 2018, 11,000 crore bank fraud. And Visa Harshad Mehta scam, 1992, stock market manipulation using bank receipts. Bernie Madoff USA, largest Ponzi scheme in history. And Enron scandal USA, corporate misreporting leading to collapse. So these cases highlight why strong compliance systems, auditing, and corporate governance are essential. What is the role of technology in fighting financial crimes? Is the most important. AI is artificial intelligence and machine learning. It detects suspicious transactions. Blockchain, transparent and tamper-proof record keeping. Regulatory technology, automating compliance process, and data analysis is identifying fraud, and KYC AML software is strengthening due diligence. So the compliance requirements for business. So companies, the compliance requirements, companies today are expected to implement anti-money laundering AML policies and maintain strong KYC process establish internal controls and audit systems, and report suspicious transactions to regulators, ensure directors and employees follow ethical code of conduct. These are all business compliance requirements, and we'll also discuss how to stay protected. So, how professionals and individuals can stay protected. Verify before investing to avoid Ponzi unrealistic schemes. Be aware of phishing, online scams, and fake banking apps. Maintain proper documentation and tax compliance. For professionals, stay updated with the compliance regulations and industry alerts. So the conclusion is financial crimes are no longer limited to fraudsters or corrupt politicians. With globalization and technology, the risks are higher than ever. But the awareness, compliance, technology, and strict enforcement of law, both individuals and corporations can protect themselves. As a financial professional or a responsible citizen, understanding financial crimes is not just important, it is essential for survival in today's financial ecosystems. Thank you. Thank you for watching. We have two channels, RR Corporates, other channel, RR Legal Talks. Please do subscribe so that you will not miss any of our latest updates. Thank you.